What is happening to the stock market this week, and why is it happening? And most importantly, what does this mean for your portfolio for the remainder of 2018? Do you know what's in your portfolio? If you don't know, you should. If you want to know, we can help. Here's what's moving the markets and your money. I'm Charles Brown. It's Friday, October 12th, and this is CB3 on 3. It happens every so often, and when it does, my phone starts ringing from the clients wanting to know what's happening. Well, here's what's happening. The market is pulling back from being overbought. Overbought means there's an imbalance of buyers versus sellers. In this case, there are fewer and fewer buyers supporting the long-term uptrend that started in 2009. Since there are fewer buyers, then what does that mean? Well, it means that there are now more sellers in the market than there were a few weeks ago. Let's look at 5 key data points of what I'm seeing right now. Number 1, the S&P 500 had gone 74 consecutive days without a 1% move in either direction. That's the 10th longest streak in history. In other words, equity markets were wound tight and some type of volatility was likely. In this case, it was downside volatility. Point 2, October is known for spectacular crashes, 1929, 1987, 2008, and others. October is about average though in terms of returns on investment. What October really should be known for is its volatility. Incredibly, no month in the yearly calendar has seen more 1% changes up or down than the month of October, and that's going all the way back to 1950. Point number 3, pullbacks are normal. Even though stocks tend to average a 7 to 8% gain each year, they also tend to have 3 to 4 pullbacks each year, which is a 5 to 10% drop off the lifetime high, and then at least one 10 to 20% correction. We got both a pullback and a correction earlier this year, but history tells us we may get more during the remainder of 2018. After all, why should this year be any different? Point 4, folks, corporate earnings remain strong, really strong. CB3 Consensus expects a 21% increase in S&P 500 earnings per share in the third quarter 18 data. This is supported by strong U.S. economic growth and the tax cuts from earlier this year. Over the past month, forward earnings estimates for the S&P 500 have risen about 1%, and the so-called Trump tariff impact has been minimal to date. Repatriation has given companies a huge cash hoard that they may invest in growth in the U.S. or may return to shareholders. And point 5, the U.S. economy is in excellent shape. Consumer spending is growing solidly, consumer and business confidence is high, the job market is quite strong, the strongest in decades, and manufacturing surveys are at near record levels by historical standards. And even though the Fed is raising interest rates, they are still historically low. The bottom line, we've been here before and we'll be here again. There is no reason to panic. We at CB3 have you covered. With 72% of my personal net worth in the exact programs you're trading with us at CB3, we continue to monitor the market hour by hour, so you don't need to do so. America has never had a brighter future than it does today. The economic data that I study vigorously supports that, and that's what I'm telling you here today. And that's CB3 on 3 for Friday, October 12th. Check out our videos and webinars at cb3financialgroup.com. What's in your portfolio? If you don't know, you should. If you want to know, we can help. I'm Charles Brown, and at CB3 Financial Group, we don't just manage your assets, we become one of them.